financial literacy as a whole is a language. So the earlier you learn how to speak it, the more likelihood you will be fluent later on.
It's never too early to start investing in your future or your family's future. Ross Mack of Maconomics joins me in this latest episode of Coffee with Katherine to discuss just how key financial literacy is and why it needs to begin at home. Welcome to this week's episode of Coffee with Katherine. I'm Katherine Ross, and I've got my cup of cold brew here. And joining me today is Ross Mack, host of Maconomics and a former Wall Street professional. So, Ross, I want to start by focusing on generational wealth, what that is, and how can we set up ourselves and our children for financial wellness?
Thanks so much for having me, Katherine. When you think about generational wealth, in short, is just what assets are you able to pass down to the next generation? Obviously, when you think about it, it's so many things that you can pass on, right? But I think when it comes to what is the actual process of actually setting that up, it starts with the education. In this country, it's a huge wealth gap, but there's also a information gap. And I think what it boils down to is, what are you exposed to when you see other families have the ability not only pass down, homes in the generation, but the ability to also pass down, securities, whether it's stock accounts, mutual funds and things of that sort. So when you think about generational wealth, you have to ask yourself, okay, what is my end goal? Is the end goal to give your family, right, your children and your children's children that freedom, right, that financial literacy, the ability not to incur so much debt, and more importantly, not to inherit debt? Unfortunately, there are a few people that, might pass on who, one, didn't necessarily have a life insurance policy. Now their family is inheriting a new debt, the cost of the funeral, right? That's a whole different thing. And I think so when you're thinking about how to actually establish generational wealth, like I said, it's for sure going to start off with the information. I think after that, it's, did you as a parent properly budget? Did you have that life insurance? Did you have a retirement account you could pass on, or better yet, did you have that property that you can give on to your next generation?
So I know that you just recently had a child. So how are you approaching this?
Great question. Right now, I have a daughter. She'll be 8 months, literally next week, and it's moving very fast. And so for me, one thing that I like to tell people is approach, trying to, because for me, it's like I didn't grow up rich. And so the one thing that I wanted to do was give my daughter the ability to at least have that level of freedom to say, you know what, after college, I want to take a gap year, go travel Europe, backpack in Europe, if she so chose, right? For me, I felt as though I instantly had to hit the ground running because, one, I had to pay back some student loans. Two, I just had, I couldn't necessarily ask my parents for money to just kind of chill, so to speak. So right now, I approach it the same way I approach a bill. And that is, I'm paying it monthly. So what I'm doing, I have a 529 account set up for her, which I recommend a lot of people set up. It gives you the ability for your children to actually go to college and actually have your money grow tax-free. So your money's able to grow over the years, and you could utilize that, for your children's tuition costs of that sort, right? So 529 account. I also have a custodial account. And that is going to give my daughter the ability to just have some money to play with. And also, as she get older, for her to actually look and say, okay, this is all mine. Right now, we're starting to talk about, passing on not just, money and assets, but we're also have the ability to pass on, knowledge, right? What's going on in the stock market? Because, at the end of the day, the stock market is, despite what's going on in the world, it has always found a way to, on average, increase by 10% each year. So for me, 529 account, custodial account. Obviously, we have property now. We're getting ready to close. My wife and I are getting ready to close on a new home actually next week as well. So that'll be awesome. At that point, we'll have 2 properties. And then I think lastly is, life insurance. I think that is something that a lot of people don't truly take advantage of. And I think that, it gives you that ability to, because no one wants to think about, unfortunately them passing away, right? But that's one thing that we certainly know is going to come at some point. And so having a life insurance life insurance policy that my daughter at some point will be able to inherit, as a death benefit, I think that will also give them a different level of cushion and comfort in this world.
A lot of my coverage when it comes to starting kids at a young age to invest has come from Acorns, which, has really kind of been ahead of the pack in promoting younger investing. And now it's Wednesday, May 19th. Yesterday, Tuesday, May 18th, we got news that Fidelity was going to launch younger accounts. I believe that the age range, I was trying to look it up while you were answering that question, was 12 to 17, but I could be corrected there. So I'm wondering what you make of these kinds of these abilities for kids to learn about financial literacy through apps.
I think it is something phenomenal, right? I think that when you start thinking about where we're at in terms of just technology, everyone's learning at their fingertips. YouTube University, Google University, and now the ability that kids have, to actually have something, some stake in the game, right? To actually see some skin in the game, actually, to actually say, okay, I want to start learning how to invest. And I think the earlier you learn, the better you will be long term. And I think that, financial literacy as a whole is a language. The earlier you learn how to speak it, the more likelihood you will be fluent later on. And so the ability for some of these apps to allow children to start learning how to invest the right way. I think that's pretty important right now. There's a lot of chatter. Okay, I have Robinhood now. First thing I want to do is buy options. I want to buy options on a stock that's trading at its all-time highs. I'm gonna buy a call option. And I think what ended up happening is that so many people are misled and don't necessarily know what's going on. And I think that the earlier you have the ability to start learning in a very, because when you're that young, you're a sponge, you can soak it all up. If you're going in and children have the ability to learn as opposed to gamble, I think we have something there. But I think that it's obviously a thin line, right? I think that what we saw, in Robinhood, where a young man unfortunately took his life, was because he thought that he was in debt like 700,000, one, which was not true. So I think that, the earlier we start, I think we have the ability to start educating them, as well as them allowing them to start investing money and start seeing that compound interest. If I had the ability to have my account that I have now, when I was 10 years old, who knows where I would be right now, right? That element of compound interest is amazing. I think the earlier you start is going to be amazing.
And Ross, what you just said kind of stands out to me because that, unfortunately, when the young man did take his life, it was, I believe, because he was doing options trading. So there was definitely a lot of discussion at the time that that news broke, that should we be limiting options and puts trading for people who don't necessarily know what they're jumping into? Because on an app like Robinhood, for example, you can set up an account and you can buy a stock and then immediately jump into these different subsects of the market. And if you don't understand what you're jumping into, it can be kind of a scary place. And it, to your point, goes right to gambling in some ways.
Without a doubt. If you look at, because there's obviously some level of fiduciary duty, I believe, that these brokerage accounts have to have. So when I look back, when I opened up my brokerage account, call it, I don't know, 13 years ago with E-Trade, there was levels that you had to get cleared in order to start doing. Like I couldn't even come right out the gate buying and just purely buying call options or put options, right? There was a level where it said, okay, you have to maybe answer a series of questions in order to get approved. And I think that when you're at a certain age and don't necessarily know what's going on, the ability to write options, I think, is something that, we have to really, pump the brakes on and make sure that the person actually knows what they're doing. And I think that that's something that we definitely want to explore and make sure that all the young people that are actually utilizing these platforms are not just jumping in the deep end and not knowing how to swim. We have to make sure that they have to pass a certain level of knowledge in order to start incurring, because as you can see, the downside can be limitless in some cases.
I got into a bit of a Twitter debate recently because I was asking for questions for you, actually, if anyone had any questions to send them in. And one person wanted me to focus in on how important financial literacy is in the public school system, in the United States public school system. And I pushed back because they said that it's on the media to do that. And I do believe that we play a part, and conversations like this do play a part in promoting financial literacy. But at the end of the day, it's up to those who are in charge of our education system. Do you agree with that?
100% agree with you. When you think about the current educational system right now, you learn a lot of stuff that is effectively outdated. If you ask yourself, should I know sine and cosine, or what's a tangent triangle or something like that, or what's Greek mythology, right? I can tell you so many things that I unfortunately have yet to be able to truly apply to my life. I think you need to understand, when you're 18 years old, you need to understand, while you're on a college campus and you're getting in the mail, maybe 10, 20 different offers of getting a credit card, you should understand what credit is. You should understand the process of understanding how to buy a home. You should understand what a retirement account is. And I think that, I think there can obviously be some level of, some balance where hopefully we can start educating the parents better to in turn educate the children. But I do believe that our education system, I won't necessarily say they're failing us, but I do believe that these are some conversations that we have to have. If you think of, you know, what America is, it's a capitalist society, and America's built on debt. And one thing is that I feel as though a lot of kids fall into a trap of taking on a lot of debt and not truly understanding what's going on, right? And I think that if we just have some, just a life class. I have a buddy who teaches a class actually at UPenn, Life 101. And one of the things is like, you could literally be on an Ivy League campus and kids still have no idea how to buy a home, or better yet, what laws and rights they have as even a tenant, right? And I think so often when you think about, getting out here into the real world, you have no idea what's going on. You shouldn't know about what a credit score is once you have a 500 credit score. I think that that conversation should already be, we should already have that conversation.
Yeah, what's a good credit score? What's a bad credit score? It's funny because I took a class in 7th grade called Home Economics. We didn't learn anything about economics. We knitted. We made some cookies. Like there was nothing about the economics being taught, or even just basic financial things. And same thing with college. I mean, I went to a very liberal college, but there were no financial classes offered. I had no idea when I got out of college. Thankfully, I'm from like a very I have very supportive parents, but I had no idea I needed a credit card in order to get an apartment. So I needed my dad to help co-sign my first apartment because I didn't have a credit score. I'd never had built up my credit. So what you're saying really speaks to that. And it makes me wonder, is it important, even if we can't get our plans together with a public school system creating some kind of class that goes along with your math, science, English, language classes, then how important is it in at least a collegiate sense to have these extracurriculars where you can have speakers come in and teach you about finances or take elective classes?
No, you hit the nail right on the head. This is an issue. And it's probably not probably, this is the real reason as to why I developed my platform, Maconomics. It is helping bring financial literacy to a community that has effectively been shunned, or better yet, have no idea what's going on. You got to put it in an easily digestible manner. And most people have never had the conversation, right? Most people hate to talk about money. It's one of those things that's taboo. Why do you want to know my credit score, right? Or better yet, I don't want to know my credit score. And I think that, having these conversations are so important because the vast majority of the world have no idea that their money is effectively losing its value just by sitting in a bank account. I think the average American thinks I'm doing good, I'm saving my money, I'm putting it in my savings account, or I'm putting it in my checking account. And they have no idea that savings account is paying you what, 0.08%? And the reality is inflation is going up 2 to 3% annually. So you're losing out, right? $100 today is worth $97 next year. And I think that us having just that basic understanding of, listen, your money's losing its value if you have it in the mattress or in a bank account at this point. And I think that, if we have that conversation in college, where kids are a little older and now they're starting to have, work a summer job, or, have work study, or now they're getting ready to have internships. I think that we could really help put, America on a better footprint, right? I think that, a lot of kids get out here, have no idea, right? They're graduating, average kid graduates college, $30,000 in debt. They don't know what to do after that, right? Okay, I'm just going to work a job and hopefully I can pay that back. Or, how do you pay it back? What are the steps? How do you actually budget? How do you get out of debt? Should I try the debt snowball method, or better yet, what is that? Right. And I think that what you have is, unfortunately, the vast majority of Americans have no idea about financial literacy, right? I want to say like 70% of Americans don't even have $1,000 saved in their bank account, right? So if you start taking all those things into account, we're effectively failing, our citizens.
So, Ross, you're a Black American here, and we know that the system is stacked against this community in particular. So, when you developed your platform, what to you stands out in the education aspect? How do you think that Wall Street, for example, can help better educate the Black community?
Great question. Wall Street's a spot that a great place that I worked, intern since I was 18, 19 years old. And at the end of the day, it doesn't look like us. And it's effectively in a different language that is very hard to even conform to. So, one of the things that I really was so passionate about was finding a way to bring Wall Street to Main Street, and doing it in a way that really resonated with people that come from inner cities, right? And I think that when you look at where we are and we talk about, us fighting for equal rights, I think that's only half the battle. And I think that when it comes to the wealth gap, there hasn't been any steps taken to actually try to find a way to actually bridge that. There's obviously policies tried to be put in place that may or may not have been successful. I'll say they haven't been successful. So for me, the biggest thing I wanted to do was just start actually teaching the community, one, better money practices, how to budget, how not to live beyond your means, how to invest. I think when you think about investing, the vast majority of Black Americans, don't own stocks. They don't own equities. Some don't have retirement accounts. And so for me, it was about trying to find a way to bring that knowledge to the community. Because when you think about the wealth gap this past year, right, where you had the vast majority, when you think about at one point, it was over 30 million people unemployed, right? And vast majority of them were people of color. And then in turn, you look at the stock market's trading at all-time highs, but people of color own a very small percentage of that. So therefore, the wealth gap only got larger. And so when you start thinking about that, it is something that is obviously fundamentally broken with the system. So it's like, you can only ask so much. Now it's like, what are you actually able to do, yourself? So for me, I took it amongst myself to say, okay, let me start educating people. This is why you need to invest. This is why your money's losing value. This is how you set up a retirement account, 401k, as well as an IRA if you're self-employed. This is how you start thinking about certain things. This is how you get out of debt. This is how you improve your credit, right? If you don't have any credit, this is how you establish it with that secure credit card or whatever it is. So for me, it was always about finding a way to speak the language of kind of the urban community, but with the actual insight and the technical training of a person coming from Wall Street. I thought that was very important.
I apologize for bringing this up and not having shared the video with you before this, but I did just recently see this interview with Stan Druckenmiller, and he criticized the Fed because he said that this last year has been one of the best years for him. And this is why I'm bringing it up, because I think that it actually feeds exactly into what you just said, where there's a divergence between Main Street and Wall Street, and also billionaires and millionaires and our average Americans. Because what he basically said was what the Fed is doing with the printing of money is benefiting the millennial or the millionaires and the billionaires, but not benefiting the average American. And I'm wondering what you think of that.
I think he hit the nail right on the head, right? If you look at what occurred this past year, let's look at it, right? The people that benefited were obviously people that owned equities and also people that were business owners. So if you think about all of the different programs from a stimulus bailout PPP loan standpoint, there were people who were living paycheck to paycheck, who effectively, were in rental properties that they were luckily able to forbear and didn't necessarily have to pay rent, but they were looking for that $300 a month, $300 a week, stimulus. They were looking for that $1,200 stimulus check, right? Oh, I'm sorry, that $300 a week unemployment check. And that was just the average typical American. Whereas the people who actually were business owners were able to not say, I don't need a $1,200 check. No, I actually need a $1 million PPP loan, right? Now, that right there was already showing you that the wealth gap was only going to get larger. Then you take into account that you had the Fed effectively printing money left and right. I want to say 25% of the money supply was printed in 2020 alone. So if you take that into account and understand what's happening when it comes to, kind of the policy that the Fed has of effectively trying to keep interest rates low, what does that mean? People who have institutional capital, they don't want to invest in bonds. So what do? They invest in stocks. And that's why you had stock market trading at all-time highs. And so when you think about it, business owners were getting PPP loans. The vast majority of people that own stocks, which for the most part were not, lower and middle class America. So the rich were effectively only getting richer. They were seeing, like you say, Druckenmiller was saying his stock portfolio had the best returns possible. So one of the things that I was literally it was so sad to me, because I'm saying, like, people, I want you guys to to participate in this new wealth creation. One of the things I was always saying is, listen, I don't care if you're red, if you're blue, at the end of the day, right, America's always going to be green. And one of the things we saw this past year was that, the Fed policy benefited people that own stocks. And as you could imagine, that didn't look like, people of color, right? I want to say Black people own maybe 1% of the stock market, and I think so for me, it was like, listen, we have to have better policies in place, but, I'm not a person who's going to sit here and, hope or picket for a better policy, right? I'm a person that's going to take the onus on myself to utilize my platform to continue to educate people, because there was so much wealth created, this past year. And then now you got people getting to the party late, and now they're thinking 2021 is going to look like 2020. But, to your point, and I'll just kind of conclude with saying, there was a huge, imbalance of wealth being created, right? The rich effectively got richer. Bezos got richer. I have no issue with that. you know, Elon Musk got richer. I have no issue with that. My only issue is that, from a systematic standpoint, the wealth creation was never really allowed for Black Americans, just coming from obviously the beginning of time to not having the ability to own homes, right? The vast majority, I want to say like maybe 90% of millionaires get their first millions in the real estate market, just having the ability to have $1 million home, right? And so we don't necessarily see that. And then you have the ability to have that level of cushion, have that ability not to incur student loan debt. Then you could actually start investing in the stock market. So we understand it is a huge thing that has just happened since the beginning of time. But I will say that, this past year definitely showed me, where America is. And I think that where we are effectively flawed at. But once again, I continue to say I'm going to utilize my platform not to, not to complain, but more so to educate and really try to galvanize and inspire people that look like me to start investing, to start being better with their money and really taking financial literacy serious.
I mean, if we're being really frank here, it doesn't seem like we're going to get any financial literacy in any school anytime soon, not at least in the public school system. So you and I think that the onus is on us to ensure that we're educating and putting, the money where our mouths are. So with that, I do actually want to jump into cryptocurrency because what you said kind of ties into that. We're seeing a lot of wealth gain being made in cryptocurrency. And for those watching right now, we are seeing the crypto market get hit on Wednesday, May 19th. So when you see this kind of move, Ross, what's your first piece of advice for people who are really scared of their Bitcoin investment, for example?
Well, first, I want everybody to be a student of the game, understand what Bitcoin is, understand the volatile nature of it. Over the past 4 years, there've been several drawdowns after it hit its all-time highs. I counted maybe like 10, right? Literally, Bitcoin hit all-time high, 30% plus drawdown. And so what I will say is understand what you're doing and understand if you're a short-term trader or a long-term trader. I implore you, if you're getting in Bitcoin, not to put money that you're going to need tomorrow or next week. You're not putting your last. You want to put money that you could afford to lose effectively. And therefore you go in there with a clear mind and say, you know what? I'm going to have diamond hands, right? Like the Reddit community says, right? I think you really need to understand that if you like Bitcoin at 60,000 and it falls to 30,000, if nothing has changed fundamentally about Bitcoin, if the US, government didn't find a way to get in and change it or whatnot, if nothing fundamentally has changed, if the code isn't broken, if no one could if nothing fundamentally has changed, if you liked it at 60,000, you should love it at 30,000. And that's what I was really educating my community. And I told them, listen, I just put a lot more money back into it. And I think that you have to look at that and say, securities or, whether it's the stock market or the crypto market, it's the only place in the world, anytime there's a sale, people run and get scared. If we're talking about Black Friday shopping and you could see a TV 50% off, oh my God, I'm gonna wait in line for 2 hours to go buy that, right? Forget Thanksgiving dinner. I'm gonna go literally camp out, wait in line to buy a TV for 50% off. But when the crypto market or the stock market is 30, 20, 40% off, oh man, the world's coming to an end. I wanna sell. That's not the attitude you should have. You should find a way. And like we talked about last year, the stock market was down 30% in March. People that got in March probably finished the year making 2, 3, 5x their money, depending on what they're in. And I think that what's important is understand what you're doing, be a student of the game, and understand that this happens. Bitcoin is still up year to date. You just have to ask yourself, are you a long-term investor? If the answer is yes, put your money, don't even look at your Coinbase. And in a few years, you'll be happy that you kept it.
I couldn't help but smile through that answer because I got to be honest with you, Ross. When I got this job at TheStreet and I had come from a personal finance background, but I knew that I really wanted to learn about the stock market. So why not literally learn on the job? And so I spent hours trying to teach myself. And the one thing I just could not wrap my head around is when a stock is being plummeted, but you still believe in it, why are you selling with the rest of the gang? Like that to me was it just could not add up in any way possible. But tying that into what you just said about, being a long-term investor, how would you say that investors should fit crypto into their long-term plans if they are, in fact, believers in it?
Well, it all boils down to one: portfolio allocation. I look at crypto as being a sliver in my overall portfolio construction. And if that is the case, whether it's you saying I'm not going to risk more than 30% of my overall portfolio in crypto, right? You have to look at that as an asset class that has the ability to have very violent 20, 30, 40, 50% swings. But the longer you're in it, you will see that over the past 10 years, the best investment, it wasn't Apple, it wasn't Amazon, it's been Bitcoin. And so if you understand that being a long-term investor, you have the ability to have time on your side, allow irrational investors to sell at the lows where the big, the big whales on the sidelines, like, okay, now I'm going to get in at 30K or 40K. You have the ability to just have time on your side. I look at cryptocurrency as a slither in your overall portfolio as something that's saying, I want to touch this money 5, 10 years from now. You want to have that level of ability to say, okay, I can spare this money. I don't need this money tomorrow, next year, or what have you. This isn't my emergency fund. We don't want to have that. This is money that you could afford to lose. However, obviously, you want to make a return on it, but you have to have the ability to say, I want time on my side. And I really feel as though the longer you wait, Bitcoin has the ability to come back, has the ability to rebound. If nothing has changed fundamentally, anytime you own something, if you see a very sharp, sell off, reevaluate, right? Has anything changed? Or is this just the overall market, big panicking? Oh, okay. The greatest quote when it comes to investing is from Warren Buffett, right? Be fearful when others are greedy and be greedy when everybody else is fearful. And so in something like this, as long as you know why you got into a stock or to a cryptocurrency, allow time to be on your side. And then as a result, get in there and capitalize, right? Because this is clearance rack. This is Black Friday shopping. This is literally what you want.
So, Ross, I want to end by asking you one question, which is, what is the key lesson that you want anyone watching this or anyone that watches you to take away from your platform?
Thank you. Great question. The key lesson I want anyone to understand is that financial literacy is a language. The earlier you learn to speak it, the higher likelihood you will have of being fluent in it. And I say that to say, study the game, understand what has occurred in the past, understand that the market is always going to have ups and downs, but on average, it's going up. So anyone at home, if you're still on the sidelines, don't yet know should you invest or don't know properly how to invest, I recommend everybody to say, start out being a long-term investor. Before you do anything, learn the basic fundamentals. And that is, you can get in by purely just buying the S&P 500, which has historically generated 10% returns each year. There are years it's up, there are years it's down. But for a person that's getting in the game, I recommend being a long-term investor. And I will tell you that will help better your life, the longer you live, right? You have the ability to benefit from compound returns, compounded interest, where you're able to have your money continually make money year over year. So I recommend everybody start investing, but do it smartly. Start off budgeting, understand how much you could actually allocate monthly to it. The same way you pay bills monthly, you want to try to pay yourself first monthly. So, if it's foregoing eating out twice a week so that you can put an extra $100 into your account, then do that. But the idea is you're not going to get rich off one trade. The idea is you get rich over time. So, and you get rich by investing, every month. And so that's what I will leave you guys with.
Thank you so much for joining us today, Ross. I really appreciate it.
This was an honor. Thank you so much for having me.